Hello, my name is Adam, and this is Bianca, Drucilla, Jessica, Corey, Kayla, Alana, Elijah, and Abraham. We are a group for the staff. We evaluated 3 companies, Zoetis, Colgate-Palmolive, and AON. Throughout this presentation, we will be discussing each one individually.
The first stock that we picked from Mr. Rodriguez was Zoetis Inc. It is the world's largest producer of medicine and vaccinations for pets and animals. The animal health industry's revenue is expected to grow at a mid-single-digit rate over the long-term period. This is supported by steady and predictable growth drivers and industry estimates.
Just last year, Zoetis recorded a profit of $166 billion, and this year it has a profit of $189 billion, which is really good because their fiscal year has yet to conclude. Its stock is currently trading at $44.57 with an earnings per share of 89 cents, and given this information as well as Mr. Rodriguez's $50,000, it gives him the opportunity to invest in approximately 1,100 shares of common shares outstanding.
AON is a leading global provider of risk management, insurance, brokerage, and human resources. They pride themselves on client services and satisfaction. Just over the past year, their sales grew to 17%.
AON's current stock price is $92.38, and their earnings per share is $4.80. In 2014, $2.5 billion was returned to shareholders through share purchases and dividends. Lastly, $500 million in acquisitions are expected to drive future growth for AON.
The last company is Colgate-Palmolive. Colgate-Palmolive is a consumer product company that is focused on oral care, personal care, home care, and pet nutrition. Also, Forbes ranked it as number 61 world's most valuable company, and it serves 44.4% of the global toothpaste market in 2014 and 33.4% of manual toothbrush market.
Colgate-Palmolive is extremely rewarding to its shareholders while posing little risk. It's outperformed the S&P 500 and its peer group for the last 10 and 20 years, but it's a defensive stock with a low beta. Because of this, it did not suffer in the financial crisis of 2008. In fact, it increased its net income, earnings per share, and dividends in those years. Looking forward, an indicator of financial trouble is the current ratio, which is kept at 1 or above for the last 10 years, and cash flows, which have been increasing. Dividends have been paid and increased every year for the last 52 years, and it partakes in generous share repurchase programs.
Colgate-Palmolive is our preferred choice for Mr. Rodriguez for several reasons. The company is far more established than Zoetis, now being on the New York Stock Exchange for 92 years. It is also the more stable choice, with AON being greatly affected by a recessionary economic climate. Finally, it has little risk while constantly increasing its dividends in the past 52 years.
Thank you for listening to all that we had to say about why Colgate was the best investment for Mr. Rodriguez. Are there any questions? If you have any follow-up questions, please feel free to contact us.